a country smaller than Belgium, 14 million people, and one of the fastest growing economies in the world. This is Rwanda's economy, and it is more interesting than you think. You hear the numbers all the time. GDP grew 8.9%. The economy is booming, but what does that actually mean? Where does Rwanda's money come from? What do we produce? And most importantly, what does economic growth mean for your wallet? By the end of this video, you will understand Rwanda's economy better than most people. I am going to break it down using a simple analogy, real data from NISR, and connect it all to your personal finances. And next week, when NISR releases the Q4 2025 GDP numbers, you will be ready to understand them. Think of Rwanda's entire economy as one giant restaurant. Every farmer growing beans, every moto driver carrying passengers, every bank processing loans, every factory producing cement, they are all working in this restaurant. And GDP, gross domestic product, is simply the total sales of this restaurant over a period of time. In 2024, Rwanda's restaurant had total sales of about 20 trillion Rwandan francs. That is roughly 14.8 billion US dollars. That is the size of our economy. Everything produced, every service delivered, every good sold, all added up. When someone says GDP grew 8.9%, it means the restaurant sold 8.9% more this year than last year. More customers, higher prices, new menu items, more staff, some combination of all of these. Now, this restaurant does not have one kitchen, it has three. And understanding these three kitchens is the key to understanding how Rwanda's economy actually works. Kitchen number 1, services. This is the biggest kitchen, accounting for 50% of GDP. When you take a moto to work, buy airtime, eat at a restaurant, visit a bank, or stay at a hotel, that is services. It includes trade, transport, telecoms, finance, hospitality, education, and healthcare. Services grew 10% in Q3 2025. Wholesale and retail trade, that is shops and markets, grew 20%. ICT services grew 17%. This sector is the engine of Rwanda's economy, and it is accelerating. Kitchen number 2, agriculture. This employs the most people, over 43% of the workforce, but contributes 23% of GDP. That mismatch tells you something important. Agricultural workers are producing less value per person than workers in services or industry. That is one of Rwanda's biggest structural challenges. Agriculture includes food crops, export crops like coffee and tea, livestock, and fishing. In Q3 2025, the sector grew 10%, driven by a 35% increase in export crops, especially coffee, which surged over 120%. Kitchen number 3, industry. This is the smallest, but the one Rwanda wants to grow the most. At 21% of GDP, it includes mining, manufacturing, and construction. In Q3 2025, industry grew 17%, the fastest of all three sectors, driven by construction up 20% and mining up 14%. Rwanda's Vision 2050 aims to shift the economy from agriculture-dependent to industry and services-led. That transformation is already happening. Services crossed 50% of GDP for the first time in Q2 2025. Every restaurant needs customers. Where does Rwanda's money come from? There are 6 main sources. Number 1, tourism. This is Rwanda's biggest foreign exchange earner. In 2024, international visitors spent nearly $600 million in Rwanda. Gorilla trekking alone accounts for 71% of holiday tourism earnings. In Q4 2025, travel exports hit $161 million, up 28% from the year before. Number 2, mineral exports. Rwanda exports tin, tantalum, tungsten, and increasingly gold. Minerals are a growing revenue source, with mining output up 14% in Q3 2025. Number 3, coffee and tea. These are the classic Rwandan exports. Coffee production surged 121% in Q2 2025. Rwanda is known for specialty coffee that commands premium prices internationally. Number 4, remittances. Money sent home by Rwandans working abroad. Number 5, foreign direct investment. International companies investing in Rwanda. And number 6, development aid, which has been declining as Rwanda grows more self-sufficient, but still plays a role. Now here is the flip side. Rwanda imports more than it exports. In 2025, The trade deficit widened by 2.7%. We import fuel, vehicles, machinery, and food. That gap is one reason the franc has been depreciating, down 4.4% against the dollar in 2025. Let's look at the scoreboard. Rwanda's economy grew 8.9% in 2024, with all 4 quarters above 8%. That is exceptional growth by any standard. In 2025, the story is even more interesting. Q1 came in at 6.5%, Q2 at 7.8%, and then Q3 exploded to 11.8%, driven by construction, mining, trade, and an exceptional coffee harvest. To put 11.8% in perspective, if Rwanda sustained that pace for a full year, the economy would double in about 6 years. That is transformative growth. Of course, that pace will not hold every quarter. Q3 benefited from construction booms and a bumper coffee season, but the underlying trend is strong. BNR's MPC estimated average growth for the first 3 quarters of 2025 at around 8.7%. The Q4 numbers drop on March 20th, next Thursday. We will break those down right here. GDP growth is impressive, but it is not the whole story. There are real challenges facing Rwanda's economy right now. Challenge 1. Inflation. As we covered this week, urban inflation is 9.2% and rising. High prices erode the gains from economic growth. If the economy grows 8% but prices rise 9%, you are actually worse off in real terms. Challenge 2. The trade deficit. Rwanda imports more than it exports. We need to buy fuel, vehicles, machinery, and even some food from abroad. That puts pressure on the franc and makes imported goods more expensive. Challenge 3. Unemployment. In Q4 2025, the unemployment rate was 11.7%. Among young people, it is even higher. The economy is growing, but it needs to create more jobs, especially in urban areas. Challenge 4. Inequality. While poverty has fallen from 39.8% in 2017 to 27.4% in 2024, according to EICV7, that is 1.5 million people lifted out of poverty. The gap between Kigali and rural provinces remains significant. Challenge 5. Debt sustainability. Public investment is driving growth, but it requires borrowing. Keeping debt at manageable levels while investing in infrastructure is a balancing act. Rwanda is not just growing for the sake of growing. There is a destination. Vision 2050 is the country's long-term plan. Reach upper middle income status by 2035 and high income status by 2050. What does that mean in numbers? GDP per capita, that is the economy's total output divided by the population, needs to reach about $4,000 by 2035. Right now, it is around $1,100. That means roughly quadrupling in 10 years. It is ambitious. It requires annual growth averaging 12%, higher than what we have achieved so far. To get there, Rwanda is betting on services, manufacturing, tourism, ICT, and the Kigali International Financial Center. The strategy is clear. Move from farming to services, from informal to formal, from aid-dependent to investment-driven. And this is where your money fits in. When the economy grows, there are more jobs, more business opportunities, higher wages, if you are prepared. Saving, investing, building skills. That is how you ride the wave of growth instead of watching it pass you by. Next Thursday, March 20th, NISR releases the Q4 2025 GDP numbers. I will break them down right here. Will the economy sustain its momentum? Subscribe so you do not miss it. And later this month, we are tackling the question I get asked the most. Should you save at a bank or a SACCO? We will compare rates, fees, and safety with real data. That video is coming on March 28th. If you found this useful, share it with someone who needs to understand Rwanda's economy. Thanks for watching Africa Money. See you next time.